Ladies and gentlemen, welcome back to the channel. We have all of your AMC stock news that you need to know today here in the markets. Now, we also have all of your other market news and some very interesting news, to say the least. A lot of Fed speakers actually trying to talk down the long end of the curve. There's a lot of speculation that maybe the long end of the curve is disanchored. This could be a real problem for the economy. We'll elaborate on that here in this video as well. So hit the like button and subscribe to the channel and source your comments, questions, or concerns down below in the comment section. So first things first, I do want to start off this video with some of the Fed speakers. Now, this is interesting. So the long end of the curve basically is like your 10, 20, 30-year bonds. Now, your 10, 20, 30-year bonds, that's really what you like lend around, right? That's what affects the actual economy. If you go to get an auto loan, that's usually 5 to 7 years. If you go to get a house loan, that's usually 15 to 30 years. A lot of your lending, long duration, right, is done using the gauge of the long end of the curve. Now, long end of the curve just means you're going to be high for a very long time. At least that's what the markets are expecting. Whereas if the Fed raises the short end of the curve, that just moves because the Fed raises it, right? But the Fed affects the long end of the curve by speaking, especially what they have done recently, on the higher for longer. And the last summary of economic projections really solidified that. So what you have seen recently is the markets have been really fearful of, especially the 30-year bond. The 30-year bond back here in just July went from about 3.8%. Now it's at 4.8%. The Fed has only raised rates like, what, once since then? I don't even know if they have raised rates since then, to be actually a matter of fact. So the 30-year bond has risen a lot just based on what the Fed has said recently. This really constricts the economy. Now, the Fed wanted some constriction, but not this fast. That's the problem. No, so Fed Mary Daly said today, policymakers can hold interest rates steady if the labor market and inflation continue to cool or financial conditions remain tight. And then you've seen this one, which this one is very interesting. Fed Daly says we shouldn't assume we're now in a higher rate environment. So literally telling the 30-year, the 20-year, the 10-year, you should not assume that we're going to be at 5% for a long time, that you don't know. So that's literally going against what the Fed wanted to see. This really stands out to me as maybe there is something breaking under the surface. Now, I'm going to play you guys this clip from JP Morgan's head of fixed income, basically a fancy way of saying bonds, right? Fancy way of saying the head of bonds. He's said literally we're at the point where things are going to start breaking, or they could break at any time. And that's very interesting. Potentially bad, or like another bank could go under, or another big institution, or something along those lines. Now, Fed Daly says, quote, we could easily overcorrect. We need to take the time to do it right. So literally speaking to the long end of the curve. And I find that very interesting. And it's really not having all too much of an effect today. It's 30 years basically flat. And this is one of those things where if the long end of the curve, it's open to interpretation. So it really has nothing to do with what the Fed policy actually does. It's up to the markets to decide. Like, hey, if the markets don't expect the Fed to start buying bonds anytime soon, well, I think it's pretty safe to say the way government spending is, the way the deficit is, the way the debt is in this country, 15 years ago, the situation looked a lot different than it does today. So now that the Fed is no longer supporting bonds, supporting the long end of the curve, well, there's now a chance that the long end could get totally disanchored from what the Fed is trying to do and trying to, you know, communicate, talk the bonds up or down. So what that basically means, let's save you guys the complicated stuff here. That means the 30-year, the 20-year, the 10-year could just keep rising. Even if the Fed's like, no, guys, we're not going to be higher for longer. The bond market might say, you're full of it. and just keep rising. You could go to 5%, 5.5%, 6%. Some people are starting to say 8 to 10% within the coming years. That would certainly be a very deep recession if that were to happen, number one. So that's a big problem. It really puts the clamp down on the economy. The 2-year treasury moving up, that's not a huge deal. The 10, 20, 30 year starts to move up. Yeah, that is really bad for the economy. It puts a lot of pressure pretty much instantaneously on the economy, and that's exactly what you have seen recently. So these lags, well, they are definitely going to catch up. So runaway 10, 20, 30 year bonds is something I think the Fed was really trying to talk down today. It makes you wonder if something is about to break out there in the economy, right? That's scary. That's no bueno. That's not what you want to see. Now, as far as what's going on here today with AMC stock is down about 1%. At one point today, you were up about 3%. You can see this wick here not looking all too great. AMC stock peaked out today at $8.83. You did get rejected. I mean, there's a lot of manipulation. We get rejected, quite often. Now, if you take a look at what we've seen recently with AMC stock, you're at a moment right now, right about here. That's a pretty important zone. So there's really this zone between about here and about here where there's a lot of resistance. That's in between about $8.30 per share and about $8.50 per share. You want to see a close above $8.50. Now, I don't know if we get back there by the end of the day today. The markets are starting to recover quite nicely from some of the lows that we've seen. Markets were down quite a bit, starting to recover. AMC stock is not playing along. So I don't know exactly what's going to happen. But it would be good to see a close above $8.50. Now, we're a lot higher than where we have been recently. The overall trend does look pretty good. If you were to just draw in, a simple trend here, right? Connecting right there. It's pretty clear to see you're in a bullish channel. The stock is slowly trending to the upside. You're above $8 per share. That's better than being under $8 per share. But some of the economic data that we're going to get tomorrow is probably going to cause a big move in the bonds. That means you're probably going to get a big move in equity markets as well. So whatever happens today, it really doesn't mean all too much if I were to say so myself. Now, the estimates for non-farm payrolls tomorrow, 170,000. Some estimates on the lower end are around 150,000. If you come in like 100,000, the markets might like that a little bit. Now, if you come in really low, like 50,000, then you have recession concerns. Same thing is true with the unemployment rate. If you tick up to like 3.9, 4%, markets might like that. Well, let me correct myself. 3.9% markets might like that. 4% might be programmed to the algorithms to say, hey, sell some stock, recession is coming, essentially. Anything over 4% might be a problem. So you want to be watching that. Expectations are 3.8% unemployment rate. Again, that is the same as we got last month. So this data coming out tomorrow morning will be vitally important for the markets. And like I said, will affect the bond market in quite a big way. And that will affect AMC stock as well. Now, there is no specific news here today on AMC stock. Seeing some interesting things happening, like I said in the last video. The shares out on loan for AMC did just jump by about 6 million. So I don't know if that does kind of make its way into the amount of shares sold short increasing. I would imagine it does, but it's hard to say when that data is actually going to reflect that. You have a short score today of 67, $200 million worth of short positions in AMC stock, 12.14% short interest of free flow. Free flow out on loan at 16.27%. Shares out on loan, like I said, this is up 57.5% in the last 3 months. So somebody just took a lot of shares out on loan. It wouldn't surprise me if a lot of those shares were actually sold short here today. That kind of pushed us back down when we started to approach that $9 level. Days to cover at 2.12, cost borrow 2.45, utilization at 62.5. If we take a look at the live numbers here, let's go ahead and see. You can see borrowed shares of 442.3 thousand, return shares of 904,000. This is obviously delayed, so we'll have to wait and see tomorrow's numbers to get a more accurate accurate picture of what's actually happening today. Cost to borrow max 6.17%, cost to borrow average 2.21%, and cost to borrow minimum 0.21%. So nothing too crazy to speak about there. Cost to borrow max is starting to creep up a little bit as we are getting some upside volatility, but I think once you start to break out above $9 per share, that's where things start to look a lot better. If you take a look at the actual option chain, like we said in the last video, 850 is a very important level on the upside. You got about 20,000 for open interest, the $9 call, 13,000 for open interest, and the $10 call, about 10,000 for open interest. So there is a lot of potential maybe to get a move towards the end of the day today, in after hours, or even tomorrow, since it is a Friday and these options do expire tomorrow. You would see a lot of kind of instantaneous hedging, that mega bounce, if you will. I'm not going to say that's, super likely tomorrow, but it is a possibility you should definitely keep on your radar. Now, something else that I have pointed out recently, the sentiment overall in AMC stock has flipped quite a bit. So you really haven't seen this reflected in AMC's share price yet. You've kind of been trading sideways, but in things like the put to call ratio has utterly collapsed recently. When the put to call ratio was over 1 for this whole period of time, you did not see a multi 100% rally at all during this time. And now you're back down to the same point you were basically before this court proceeding. So that could allow AMC stock to make a bigger move. If you look at the Stocko tracker data, you are seeing a massive outnumbering of calls relative to puts. That could also help fuel potentially an upside move. I still do stick by my call for a multi 100% rally that could be coming anytime now. It might just wait until earnings. If we do get another profitable quarter, that would make sense. That would, in theory, cause quite the rally as well, sitting at these depressed levels for AMC stock, guys. If you look at the RSI, a little bit in the neutral, you're still on the oversold side, and the MACD looks pretty dang good over here, really trying to reach up and start going positive. So really all good things to say today. Another short attack on AMC stock. It's pretty straightforward. It's pretty simple. That happens all the time for AMC. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.